right in. Don't have many slides, but we've been talking a lot about getting financing for non-warrantable condos. So what is, am I using the right term, a non-warrantable condo, James?
Yes, a non-warrantable condo.
Okay. What's the deal with that? What's that mean?
Basically, in simple terms, it's a condo that does not meet agency guidelines, whether that's Fannie Mae, Freddie Mac, FHA, VA.
Okay, so Fannie Mae, et cetera. So basically, you can't get conventional mortgage financing, and somebody who's looking to buy or refinance one of these condos has a hard time.
Correct. Becomes a challenge.
So what do people usually do when they try to buy these condos? They just buy cash, or what options do they have?
Some do, but obviously for most people, the average person, cash is not an option. So it's important to find local lenders such as Bond Street that can help finance these type of transactions.
Okay, and it's usually somebody local. There aren't big companies that do this.
It's very specialized because it has a lot to do with your lending area, and so where the large banks or the bigger market investors really focus on the national. It's very, very specialized to the local marketplace. Therefore, those investors that you're looking for, portfolio type investors to finance these type of deals, they're required to lend in these areas. So they look at it a little bit differently.
Okay. So there's probably two types of people on this webinar right now. We're going to have the realtor, right, who's curious about how to maybe help their client finance, and we're going to have the end user or the person who needs a mortgage.
Sure.
So can you speak to, let's start with somebody who's listening who needs either a mortgage, they're looking at a condo complex that they've learned they can't get financing on, or maybe they own one and they need to get refinanced. What are the steps they would take?
So if you're looking to buy a condo, and I always say to the client that when buying condos, it's hard enough to get a mortgage today as it is, right? So you could be very qualified, 800 credit score, W-2 employee with very good low debt to income, putting 20% down, but yet the condo project itself is the other half of that formula. So really, when you're searching to buy a condo, you want to work with your mortgage lender to understand more about the complexes that you're looking in. So that homework really should be done up front. So if you're looking in Hoboken, for example, just to name a building, in the Hudson T building, you would want to know if there's any challenges with that condo. So typically we have a database that we can search and see if those condos are on an approved list, and let the client know what the challenges may be specific with that project. So as part of the pre-approval process, you also want to pre-approve your condo project.
Okay. So condo. Pre-approve your condo. All right. And I'm sure the agents listening can help their clients do the same thing. They're probably going to be aware locally which ones.
Absolutely. Yeah, the agents are very knowledgeable in the local market. They know the condos that have challenges, so they can definitely point that out. And again, it could be very little things. I'm not saying that just because a condo is not warrantable, it's a bad condo. In fact, it's the complete opposite. And I think for some buyers, if you think about it, there's an opportunity because, yes, it's not open to everyone, so it does depress the value of that condo. But once the issues are resolved, and typically they are within a number of years, that is going to unleash some, pent up value that was built up because it wasn't available, let's say, for everyone to be able to finance it.
Right. So if you're looking for a good deal right now, and you know that every other buyer in the marketplace probably doesn't have. Is just going to hear that they can't get approved for this building, but you have a little in with somebody like Bond Street. You go get the mortgage now, knowing that later these issues will be resolved, and there's going to be a spike when new buyers come in.
Yeah, and it could be as little as a single entity owns more than 10%. Okay, that's an agency guideline. If an entity owns more than 10% of the units in that building, it is non-warrantable. So sometimes you have where the plan sponsor or the developer had held on to units, the builder held on to a number of units, and if that equates to more than 10% of the total project, that in itself makes it non-warrantable. So it could be a great condo, but because Ryan owns 11 units out of 100, you cannot get conventional financing for it.
Okay, so the real estate agent is an opportunity for agents to really provide good value, especially maybe for their investor clients. And this I don't know at all. Are you able to buy condos as a second home or an investment property, or are we talking about owner occupants only here?
No, absolutely. You can do them as second homes and as investment properties as well.
Okay, so if you're thinking you want a second home in North Jersey, or maybe you're buying one for your kid or something, who's going to college there, and you're think you might want a good investment, work with your agent, look closely at these buildings, and there might be an opportunity to buy something now where there's not a lot of demand, and then suddenly in a few years there's more demand for that building because some of the warrantability factors change.
Yeah, even like you mentioned, the second home. We have many clients that live in central or southern New Jersey, for example, and work in Manhattan. So they buy a small condo across the water that they can, for the convenience of being closer to work, and they can stay there a few nights a week and head home on the weekend to the family. It does happen.
Cool. Yeah, take the path over and stay. And there's even a little Airbnb factor there maybe too for them, right? When they're not there.
Absolutely.
Yeah.
Absolutely.
Okay, so nuts and bolts of it is, if somebody's watching this video, it probably is going to be because they've run into this. They were looking to sell a condo, maybe they're an agent, or they live in one and they learn they can't get refinanced. What do they do? We don't need to go too far into it today. They need to just start an application with you, James, or give you a call.
Yeah, the best bet is to either give us a call or apply online, and
Okay.
we'll obviously receive instant notification of that. We can download your information and really just talk more about the overall situation and what you're looking to accomplish in the financing side of it. There are certain limitations from the standpoint that product-wise, everything is pretty much available what it is in the conventional market. The rate might be a touch higher. We're not talking anything extreme, maybe 1/4 to 0.5% higher. So I do like to, it does make sense to have that conversation up front. Say, hey, you might not be able to get that 3.99% today. It might be 4.5% because of the situation with the condo. How does that affect affordability? Where you want to be as far as a payment? And if you're okay with it, again, I think there's upside down the road once the issues are resolved that make the condo non-warrantable. And if you're okay with that end result, you're in a good position to take advantage of usually a temporary situation.
Okay, so final point I was typing here that I was surprised to learn is that not all mortgage lenders are hooked up to do this.
That's right.
You guys are probably one of the few in North Jersey specifically, in all New Jersey, who have a lot of experience in this area and are going to be able to walk clients through. So if you want to get in touch with James, just shoot me the number. I should have memorized it by now, but I haven't.
No worries. 201-282-5016.
5016. And below this video, a lot of you guys will be watching the recording. I'll have a link where you can just go get the pre-approval right away. Maybe tell us what building you're thinking about on that form and what the situation is. And James or one of the Bond Street mortgage advisors will be back pretty soon.
Great.
Okay. Thanks a lot, James.
Thank you, Ron. Talk to you soon.
All right.
Bye-bye.
Bye.